Common sense dictates there will be no rate hike next month. Tony Nyman, Informa Global Markets. We saw some disappointing data out of the US this week, including non-manufacturing PMI, which expanded at a slower pace in January compared to December. Today's NFPs came in less than expected, but the unemployment rate dropped to 4.9%. So do you think a rate hike is still off the table for March?
We've stayed data dependent throughout, and we'll continue to be. Jobs data has been consistently strong. Obviously, there was a wobble today. But elsewhere in the economy lie the problems. Interestingly, some perhaps dated polls suggest the majority of economists had voted for some extra tightening in March. But if you look at the implied probability rates, they're down to 10%, and the futures market's not actually fully pricing in full tightening until early H2 2017. So judging by this data run, recent Fed speak, which has talked on the negatives of tighter financial conditions, a stronger dollar, mixed data, and weakening global economy, common sense dictates there will be no hike next month. We looked to Fed's Kaplan yesterday, who talked patience, and we think that's right.
The Bank of England kept rates on hold this week, citing global economic weakness. But in your opinion, what is the BOE's biggest near-term concern?
Well, obviously, the unchanged decision was no surprise, although the bank did cut its CPI and GDP forecasts, with the case of growth sharply. 2016 was downgraded to 2.2% from November's 2.5%. So the bank sees soft wage growth and, similar to the Fed, deteriorating global financial conditions are main concerns. And also at the QIR yesterday, they talked about the outlooks for emerging economies, the weaker US, and trade generally in the world as concerns.
Low oil prices are weighing on the Canadian economy, but analysts are not expecting any interest rate cuts by the Bank of Canada this year. Do you think oil prices will recover this year and provide a boost for the Canadian economy?
Well, the BOC policy meet was an interesting one mid-last month. Despite the growth forecast downgrades, Governor Poloz and co. surprised us and markets by being less than dovish. The board talked optimistically of a reorientation of the Canadian economy toward non-resource activity, helped by stronger US demand, the lower CAD, and of course accommodative monetary conditions. Of course, relatively weak Canadian growth would be helped by an oil rebound. Oil, from our perspective, from very low levels, yes, we expect a recovery, but if past patterns continue, we'll probably see a period of stable, small higher and an approximate, say, $23 to $25 oil range over the next 12 to 18 months. There is little evidence, Louise, that low prices have as yet significantly dented world output, and the policies of OPEC, etc. As far as we're concerned, this can't be indefinite, but at the moment, that's how it is. This means for Canada, it's likely to be more dependent than ever on the strength of the US economy, and ongoing headwinds are likely for the local economy and the CAD.
And lastly, what other events or data releases impacted the financial markets this week?
Sure. Well, we're most interested in FX and G10 FX, and so the week's dollar sell-off has been very interesting. As we said earlier, relatively weak US data and that less hawkish Dudley, pretty much dovish really, led to quite a turnaround for the long dollar, while risk aversion hit related markets of oil, stocks and yields. We felt dollar-yen correction from near 122 after the BOJ surprise negative rates move to south of the BOJ easing levels to the 116 area is overdone, particularly as Kuroda is threatening to cut further. And if you look across other dollar majors, we think along similar lines for, say, euro dollar, which has been rallying hard around 112, as the ECB is likely to again ease in March. And if you're looking at cable, it's been flying as well this week. But with our three weights of Brexit worries, waning UK economic momentum, including current account woes, and the cautious BOE, we still see dollar strength ahead and cable lower. What I would point out before we finish, Louise, is obviously Yellen's talking next week twice in her testimony. So that could be a big dollar mover next week.
Tony, thank you very much for sharing your insights with us here at Dúchascopy TV. Well, from me, Louise Macaulay, it's goodbye for now.